And we are live. Content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance references historical, and there is no guarantee of future results. All indices or management may not be invested into directly, and economic forecasts set forth during the event may not develop as predicted. There can be no guarantee that any strategy will be successful. These thoughts and opinions of those at Gimbal Financial do not represent the views of LPL Financial. Securities are offered through LPL Financial, member of FINRA and SIPC, and investment advice offered through Gimbal Financial, a registered investment advisor and separate entity from LPL Financial. Hello.
Good morning, Amanda.
Good morning. It's good to be back. Good to see you all. Hi, Eric. Hi, Doug. Hi, Keith.
I overheard you guys talking about a cat might jump in Eric's screen, and I really hope it does, because cat videos are some of the greatest things ever. And if we had a cat video, we'd get like 10 million hits.
There we go.
Kids from all over the globe checking in, tuning in to Gimbal Financial's webinar. Just future investors left and right.
That's a way for us to really launch.
Nice, Amanda.
Oh, well, Eric, you want to kick us off with anything that you've learned this week? And you've had a short week, if I'm not mistaken.
Really short week.
So if you don't have anything, that's fine.
Yeah, I can have something. So I have a quote. Our greatest weaknesses lie in giving up. The most certain way to succeed is always trying one more time. And that was by Thomas Edison. And so, when times get tough and, you may be struggling at home, life, sports or something, giving up is not really always the best option. So you just always having that perseverance to keep pushing forward and continue to move forward is definitely a good option. And here at Gimbal, we are happy to give you those words of encouragement and keep helping you press forward to reach your goals. So if you ever need help or just want to have a chat, don't be afraid to reach out to us.
Awesome. That fits the theme that we've talked about today about taking risks a bit. How about that?
How about that?
I don't even know if Eric knew that that was our theme for today, but it fits in pretty nice.
Yeah, Doug said last week we don't even discuss this in advance, so we discussed it in advance. So here's my kickoff for that. What is the greatest risk you all have ever taken?
When I think about taking risk, there's a couple things that come to mind. I think for anybody, perhaps the number one thing that comes to mind, if we had that like poll thing, like where you could type in, what is the number one thing? I think the number one thing people think of is money. Taking a risk. I don't want to lose my money, or I want to make more money. And so risks, reward, and money tend to go together pretty easily. And everybody here probably has a risk reward money story. It could be a car they bought, it could be a broken dream, it could be a vision, whatever it is. But for me, I think one of the best risks, maybe it'd be one of the best. I don't know if it's the best, but it's one of the best, was in 2000, year 2000. I signed up for the Big Brothers Big Sisters program, and I didn't know what in the heck I was getting into. And that's one of the great things about risks, is oftentimes you have no idea what the heck you're getting into, because if you knew, it probably wouldn't be that big of a risk. But when you don't know what you don't know, there's a risk. And we're going to get into this word later, but it's transfer. There was really nothing to transfer this risks to. There was no backup for me. When I get into things with relationships, I don't leave easily. I'm like the dog who sticks around, or the cat who keeps coming back. And so when I became a big brother, that was a risk. I'll tell you, the reward has been great 21 years later. I mean, my little brother looks like a starting linebacker for the Colts. We're still hanging out. We still have a relationship. And so I think risk and relationship are something maybe to think about even more with risk in finances.
There you go. There you go. How about you, Eric? What's your greatest risk?
You know, I'm slightly younger than most folks in this group, and I'm a pretty conservative individual. I try to decrease all risks, whether that's financial, relationship, or just in life in general. I try to keep things on really low just to minimize everything. And recently, it was September 20th on 2021, I took a pretty big risk of leaving my current field in medicine and then moving on over to this thing called Gimbal Financial. And it was a pretty scary time for me. And it was definitely, it may sound small, but it was a very big risk for me to be able to do that.
Awesome.
How about it, Amanda?
Falling in love. That sounds so gushy, but into the relationship realm. Falling in love with your best friend or telling him that you love him is a big risk, and it's one worth taking. And now we're getting married, so that's the rewards definitely outweigh the scariness of making that jump. So
That's very cool. I looked up the definition, a couple definitions of risk before we started. One was the possibility of loss, and then the other was an outcome different than your expectation. And
I like that one.
yeah, and yeah, like to me, the greatest risk would be not to take risk. That would be the greatest risk because I don't know how you can live without an unexpected outcome, right? And so to narrow your life down so you don't have any unexpected outcomes just sounds horrible to me. It just sounds horrible. So the greatest risk to me when I was thinking about it, one would be getting married. Like I love Connie and we've had an amazing run, but that risk at that point in time, I'm kind of a till death do you part believer. And so that decision grid was just cranking through my head. And then that would be closely followed by having my first, second, third, fourth, and fifth child, because I don't even know if I had expectations what that outcome would look like. I just, and I still don't know what that looks like, right? So I think it goes back to what Doug says, and really all three of us or all four of us said is the greatest risk is relationships. That if you're going to take a risk and put yourself out there, relationships are they're the unknown. You never know what you're going to get.
Yeah. So Keith and I were talking earlier today about the word transfer. And so when you think about risks, you can transfer the risk to somebody else, some person or some entity. Easiest example, insurance. Would that be fair?
Insurance is an example, yeah.
Yeah. And so when you buy an insurance policy, whether that's a life policy or a policy, homeowners, auto, you are transferring risk to someone else. You're paying premiums with the agreement that someone else is going to foot the bill when it doesn't work out. And so that's a transfer of risk. You're not taking the risk 100% yourself. Would you add anything to that? Yes, you would.
Oh, would he?
I was listening to one of my novels this morning as I was doing something, and evidently the slippage or the losses, the expectation, according to this particular novel, in Las Vegas is 8%.
Oh, really? That doesn't sound bad.
Yeah. So if they're gonna,
what are you doing tonight?
no, they're not gonna lose. They're not gonna lose more than 8%.
Oh, you're not talking about the gambler. You're talking about the house.
Yeah, the house is gonna win 92%. So they put that at 8% out there so that you feel like you might have a chance. And so there's no real risk in Las Vegas because there is no. If your expectation is you're going to win, it's your expectation that's wrong because Las Vegas doesn't exist for that. But I was reading about this guy named Jim McIngvale, he is also known as Mattress Mac. Do you know him?
No, never heard of it.
Mattress Mac, back in June, made a $3.3 million bet in Las Vegas, which, according to what I just said, there's a 92% chance it was a bad situation for him. But Mattress Mac, all he was doing with that bet was transferring the risk to Las Vegas. And so what he did is he offered potential mattress buyers who are going to buy mattresses over $3,000 a free mattress if the Houston Astros win the World Series. If they win,
I love stuff like this.
if they win, he wins $39 million, which offsets his cost of the mattresses. And he set his situation up so he cannot lose in that situation, because people are innately going to say, I could go buy the mattress from Mattress Doug or Mattress Mac, but Mattress Mac gives me at least a chance that I'm going to get it free.
Oh man, that is the coolest.
Yeah. And so all that Mattress Mac did was took $3.3 million and transferred his risk of his advertising campaign to Las Vegas. He wasn't, I don't know him well enough. I haven't read enough about him to see if he was actually, I don't think he was speculating. I think he was just transferring the risk of those mattresses. So there you have it. That's how you, if you're going to go to Las Vegas, just count on 92% of the time letting the money stay over there. And if you're going to do it like Mattress Mac, you need to get those revenues coming in to offset the $3.3 million bet.
Risk transfer is in the news. I mean, there's a lot of money being spent out of Washington, or talked about spending money this week. And that's risk transfer. I mean, they're risk transferring to I don't even know if it'd be my grandkids at this point. It might be my great grandkids, but there's a lot of risk transfer going on. I mean, the three of us could go buy Salesforce Tower today, and it would be risk transfer to whatever bank would be crazy enough to loan us the money for it. And so it'd be properly paid for. It'd all be paid for, just like the palladium and Carmel is paid for.
Yeah.
But somebody has been transferred all the risk. And so to Keith's question, if you've got a good risk story, I would love to hear it. It'd be encouraging to hear it. And taking risk, what was it? You don't know the outcome?
It's an outcome that doesn't meet your expectations.
Okay, an outcome that
The possibility of an outcome.
It could exceed one way or the other.
Yeah, right. Like
Yeah.
you wouldn't take the risk if you didn't think it would be more than the expectation, right? Like,
Yeah. And so there has to be a mindset even of, okay, this is when I get out on this side or this side.
right.
Yeah. Otherwise, you're just going into an open end, like, no transfer of risk.
Yeah, Connie and I, when we got married, I wanted 0 kids, and we ended up with 5. And I'm blown away by the risk of that decision. I like it. It never occurred to me how cool it would be to have a bunch of kids. And so, had we not taken that risk, I don't know what the opposite of that would have been. Right.
Right.
I have no idea too. But I know what safe looks like making safe decisions, and it just my brain doesn't process that. And kind of what we do is help you all think through risk and help you manage those risks to the best of our ability within the parameters of what you're looking for.
A great byproduct of risk is learning. And you're going to learn a ton when you take risks. I mean, when I took the risks with Big Brothers Big Sisters, I didn't have any kids. I never even thought about having kids. But having my brother in my life, I have learned so much. Or, I recently went and looked at a building. Buying this building would be a lot of risks if I did it. But I have learned so much. And my uncle gave me some of the greatest advice. He said, Doug, you don't have to do this. And so when you're looking at risk, hey, nobody's telling you don't have to do it. You can do it, but nobody's telling you have to do it. And so just know the power of walk away. It's there. And when you're looking at something, just be ready to learn, have a learning spirit.
I think what you said there is also, it's an age-tested principle. It's an old writing that says, with much counsel comes much victory. There's no guarantees in anything in life, let alone investing. But if you are considering risk, you might want to talk to somebody that understands it a little bit better than you do, because that helps you kind of look at it from more than one perspective.
Yeah. What have you learned about this situation that makes you like this or that particular thing?
Yeah.
What have you
absolutely.
learned? What have you learned in the past? What are you learning now from it?
How about if I talk about some market risk? Is that okay?
Yeah.
I'm going to share my screen with y'all. And
You're going to look at 30 stocks.
I'm going to look at history is what we're going to look at today. So here we have what's called the Dow Jones Industrial Average. It is what a lot of people think the market is, but it's only really 30 stocks, like Doug just said. And it's traded pretty much sideways since really right about here. When is this? In May, it's been going sideways. But what I wanted to talk about was, when is there risk in something like this?
Yeah.
When is the possible outcome different than your expectations? And I thought I would take you on a little history lesson here. We're going to go back to January the 1st, 1920. And you could have bought the Dow Jones Industrial Average. Where's January 1st? Is this it here? Yeah, you could have bought it right here for 107. 107 was the Dow Jones Industrial Average, and it had
That's
gone,
just cool, I think.
yeah, and it had gone up 25% over the previous year, which is a pretty darn good return, right? Like it doesn't look like 25%, but that's the difference between 107 and 80-ish. So then if you spring forward, I'm going to give you some cool dates in history. If you bought it at, let's just say you bought it at 100, and then we've sprung forward almost a decade. We're going to go to September the 3rd, and we're going to go out till 1929 and show you how well we did here. We went from 100 to 381, 3.8 times your money, right? That was a great, probably not even an expectation. I bet if you had bought it in 1920, you wouldn't have expected to almost quadruple your money a decade later.
Some family went over to the local Duesenberg store.
Amanda, can you find us a picture of a Duesenberg for when we break out here in a second?
I got you.
What I wanted to point out is that was the riskiest day of the decade.
Yes,
right
it was.
Everything, look how smooth sailing that's going. Like
Like it'd be tempting to buy more. You're at all-time highs.
like everything we've
It
talked
looks
about, like
great.
we talked about all these moving average over the last few weeks and how they are important, and it's giving you all those things. But this software gives us the ability just to click a day at a time and watch what happens. So I'm just going to click a day at a time here, and all of a sudden we broke through a couple.
Not bad.
There was a couple moving averages there that it was testing, and then it broke through that one.
Okay.
And then it's holding, and it's holding, and it's coming down to the next one, and it's holding it,
Yeah.
and it's holding. It just keeps clicking away. Wait, now we're down to we've gone through 3 of them.
Now
well,
we
we're
have-
right at the 50.
Yeah.
There, we broke the 50.
Eyebrows are raised now.
Yeah. And we're holding on. And we just keep going. I don't know if this is staying up on your guys' screen. I don't know how fast this technology works. We're at the 200-day, and it bounced like a trampoline right there on the 200-day average. And
That's wild.
so yeah, so it had done that earlier in the year right here, and then it just kept bouncing around. Hit that 50-day moving average right there, and couldn't get through it. See how that worked? Isn't that interesting? There's just historical data. Came back down towards the 200. It's bouncing. Oh,
That's not good.
and then it had this thing we've talked about here in the past. This volume right here. A lot of sellers came in. Well, where's my line pin? Right here, the volume on that day picked up, and sellers were coming to the market right there. This was. Let me go back to what day this was. This was October the 21st. You could have maybe taken some money out of the market on the 21st. That would have given your, the problem with greed and fear is that you're at 315 you're at 320 at the end of the day there from 380.60. So what is that, about a 50? You're down 15%. And last week, was it last week or the week before, we played the William O'Neill turkeys in a cage thing. You're afraid to let those things go. And then all of a sudden, you just keep, and everything's been going well this decade. Oh, and then we have another day there. That was the 23rd, and we're down 20% now. On this next, look at this day here, it dropped all the way to 272. So you're down about 25%. The volume's picking up.
The charts.
Yeah. And there is the 28th. And here is what they called Black Friday, I think it was. This was the bad day that everybody talks about. Right here, the market was down, what's it say? Almost 12% that day. But you had opportunities to rethink that quite a few times before that even happened, when it started testing and you see the volume picking up. And so there you have it. I
see about 3 days that were critical. When you went through the 50-day, what day is that?
That's this day right here is where it gave you a warning.
Yep.
And that day was
so
the 23rd of
so
September.
you had about a month here now. So what day was that 320 on? Where
This one right here.
Okay,
that one on October the 4th was giving you some warnings.
Yeah, then you had the next, it went through the next, it kind of gapped down. So you kind of have 3 warning shots, right?
Yeah. And I brought all this, we're talking about risk, and these are some of the things that we are watching for as we're trying to manage risk, is that history doesn't repeat itself, but they say it rhymes. And I thought I would just take this to a monthly picture for you and just take you forward a few months. We're just looking at what happened to that over the months that followed, because we've been taught buy and hold works, and it looks like maybe it's going to rally. Then it hit that moving average and bounced off of it, and then it rallied a little bit, and then it went to a new low.
William O'Neill's data says that 70% of the time markets test lows.
Yeah,
it didn't do that in March of 2020.
No.
That was the great head fake, the V up. But here, 70% of the time.
Yeah. Well, and here it came through it a year later. So now you're a year into more than a year, because you had September to start getting less risky. And then it just, I'm just going to click fast through here so you can kind of see what this thing did for a couple of years. There you go. That's when it's a punch in the gut right here, that you've gone all the way from 360 down to 42 at the end of that month. And what happened is it was 25 years later before you hit this 386 number. Yeah. And why I bring all that, well, we're not far enough in the year. We didn't get there yet. We get there here.
25
Still
years later. Dow Jones.
There we go. Is that it?
Was this the
There we go. This is the Dow Jones. So 25 years later before we hit that bad, where we said we had the risk, but we didn't perceive there was any risk. And why I bring that up is today's that anniversary of that big sell-off on October the 29th, 1929. Just a little bit of a history lesson, not trying to freak anybody out, because there's a lot of reason to be optimistic and go back to the day and look, you know what, we have a pretty decent market going on here. Yeah. And you can tell that we've shown this line before here. This shows relative to the S&P, how's the Dow Jones doing? It's angling down. It's not doing as well as the S&P 500, but there you have it. That's the market in review.
Good work, man.
Awesome.
Going back in time to October 29th. Yeah, nice.
So
Yeah,
it would be on October 28th if you went here. Is that what you're looking at?
that's
and if you went on October 29th of 1929, you'd have a lot of regrets.
Look at that showroom. Holy. That was just a cool time.
Oh,
Look
this
at
is-
that.
Yeah, hopefully you went to that showroom and bought one of those and then took out half your money so that you could keep living on
They
it.
even have, go back to that picture, Amanda. They have those things roped off so you couldn't even get to them.
No,
See
that's
that?
a museum today. So
Oh,
that's,
okay. I
yeah.
thought this was a
I
real
think
showroom.
it gives you the vibe. When I typed in Duesenberg, there
Yeah.
were guitars that popped up. So
Oh,
I
nice.
took a risk. I'm hoping you meant cars, not guitars.
Well, we've got a little bit more time. I thought I'd just show some what's really going on in the market today. I changed my stocks from the FAANG to the FAANG-MA because that includes Microsoft. So I didn't want to.
You didn't want to exclude Bill Gates?
Yeah, Bill Gates. He's all right.
Well, maybe the FAANG might change
Fang
to.
Ma.
Yeah.
That's the
Might
first
be
I've
changed.
ever heard Fang Ma.
I
Did you come up with that?
No, I didn't. Some people call it the FAANG Man. So here we go. Just a quick review. The reason I want to review these is they represent 38.3% of the NASDAQ. So
Yeah.
if these stocks start turning, then you might see the NASDAQ actually turn. And so here's Facebook. If you were going to say which direction it's trending, I would say down. Apple came out with earnings today. They weren't, or yesterday, they're down 4%. That would affect the market a bit. Amazon came out with earnings. They're down 4% almost today. Netflix has been the one that's been trending upward and they're hanging tight. Google, there's two forms of Google, Class A and Class C. It's kind of trending sideways right now. It's shown a little bit of strength. Microsoft has been trending upwards. And then here's the second Google trending sideways. So that's the FAANG stocks. In case you were curious, FAANG-MA, what was going on with those guys, and they will have a big impact on what happens in the NASDAQ. They don't have as much weighting in the S&P
It's got
500.
a big impact overall. I mean, just every one of these firms has venture studios where they're buying smaller companies or investing into smaller companies that we've never heard of. And so their impact is huge.
They've really affected culture as well. If you think about Facebook and for good or bad, what that's done, Apple, everybody's looking at their hand these days, Amazon, the way you shop, the way you do things, the way you do technology, Netflix, you lost, we talked a few weeks ago about the last blockbuster, and then Microsoft is just clearly opened ways to communicate via technological ideas. So they've transformed our culture. And yet there's been other companies like that in history that have done the same thing.
And there's some guy in some garage somewhere going to do it again.
Yes. Yes. Well, it's been a risky day.
It's been a fun day.
Good.
Yeah.
Yeah, exactly.
Anything else we need to know, Amanda?
Nope. That's it.
Sure. It's good seeing you again this week. See you all next
Likewise.
week.
See ya.